here. So let's look as we jump into the dollar analysis. Dollar sign DXY is what we're going to look at here. And let's just blow this up so you can see those beautiful big harmonic families that we have right in there and how they line up. We have the ideal cycles on the bottom here and the actual cycles here. You will note the minor cycle right there, how beautifully positive it is and how it suggests the next cycle will make a higher high. The same thing in here, positive, a higher high right there. This was the COVID panic, so it made this big major diamond top. And then because of the panic and all of the money created by the Fed, that caused the dollar to move to the downside. And now the dollar is in a rebounding period right now. The fact that the dollar almost got back down to those lows right over here says that the likelihood of getting through the 78.6 is small, that you see right there. Now it's backing off from it, but again, there is a potential because this is only 3 weeks into this low right there, and you'll see the note that I have in there that it's that low looks pretty clear, and it is early when you look at that. So that would be suggestive that if that is the low, which looks quite obvious by the cycle shape, and that's really important to the analysis. Remember that a cycle analysis is based on the rhythms that we see, and the shape is very important, and it's very visual. So it's an observational type of analysis, and we look at the things that are very probabilistic. So it tends to be very mechanical while observational, and that maybe in some ways is a paradox. The next rally should get it up somewhere to this 78.6, and potentially, because there's a slight upward bias in here, if it gets past that, to test those highs up near 94, which is a potential. The probability of this rally being over is very small. That means that the odds of continued rally are high. And you'll see that as we look at in some of these other pairs, as it looks quite realistic. So this correction that you see we're in right now in the market is likely to continue for a brief period of time. Maybe about, we'll just say something like 5 to 8 days of some slightly lower action in here. If it gets down here to about 91.30 to about 90.95, that looks like the area that the dollar would be a buy. In other words, the other currency pairs would be a sell. So again, we're looking for like 5 to 8 days when we look at that in the dollar on the downside, and then resuming to the upside again.